innovative approaches to be more relevant and responsive in the light of today's realities. Participants discussed strengthening multilateral development banks and monitoring and reporting framework that will track progress against the G20 MDB roadmap. Members are looking forward to the inauguration report due later in the year under the South Africa G20 presidency that will capture the progress made by MDBs in implementing the MDB roadmap. Members express their commitment to addressing debt vulnerability in low and middle income countries and reaffirms their commitment to further strengthen the implementation of the G20 common framework. To give effect to this, the G20 FCMG, which stands for Finance Ministers and Central Bank Governors, endorsed the G20 note on the lessons learned from the initial common framework cases and the G20 note on steps on debt restructuring under the common framework. These documents have been published on the G20 website. In addition, fact sheets on the common framework, country cases for Chad, Zambia, and Ghana have also been published on the G20 and Paris Club websites to improve information sharing. During the discussions, members acknowledged a G20 note on special drawing rights channeling, which highlights the achievement of exceeding $100 billion in voluntary SDR or equivalent contribution for countries in need, with the current pledges standing at $113 billion coming from 35 countries. Members also underscored the need for enhancing the representation and voice of developing countries in decision-making MDBs and other international economic and financial institutions. Members recognize the relative resilience of capital flows in emerging market and developing economies despite heightened global policy uncertainty, underscored by strong macroeconomic fundamentals and sound policy frameworks. They've also highlighted the growing influence of non-bank financial institutions and stressed the importance of gaining a deeper understanding of their impact on these flows. Members further emphasize the significance of structural reforms in fostering long-term sustainable capital flows to emerging economies and developing countries. Ministers and central bank governors considered key recommendations for enhancing collaboration among vertical climate and environmental funds, multilateral development banks, national development banks, and the private sector. They also shared views on the most binding macroeconomic and microeconomic constraints to scale up sustainable finance. Members reaffirmed the urgency of scaling up financing for adaptation and just transitions and reflected on key recommendations emerging from a comprehensive analysis undertaken by multiple knowledge partners. This included guidance on integrated adaptation into voluntary transition planning, addressing insurance protection gaps, scaling financing mechanism, and strengthening enabling environment. Ministers and central bank governors also received an update on the work of the Climate Data Steering Committee, which has developed a series of principles for development of a common carbon credit data model aimed at promoting interoperability and improving transparency of carbon markets. They noted that the draft data model is currently undergoing a public consultation with both the private and public sectors. G20 finance ministers and central bank governors also noted progress made towards finalizing a framework for effective planning and preparation practices for pipeline development report, blended finance, de-risking measures report, and a toolkit for developing a cross-border infrastructure projects. They also endorsed 2 deliverables: a practice guide on leveraging infrastructure project-level data and digitization of the pipeline, and a note on improving availability and accessibility of market data. Collectively, these reports will support credible pipeline development by addressing data challenges that hinder substantial private sector participation in the public sector infrastructure. The meeting reaffirmed commitment to addressing vulnerabilities and promoting an open, resilient, and stable financial system, including the full and timely implementation of all agreed upon reforms and international standards such as Basel III. The meeting supported the FSB's work to NBFI data availability challenges, as well as recommendation for addressing systemic risks from NBFI leverage. Members reaffirmed their commitment to the effective implementation of the G20 roadmap for enhancing efficiency and safety of cross-border payments. Members acknowledge the critical role of international standard-setting bodies, including Financial Action Task Force, which is, we usually call it FATF for short, Financial Stability Board, and Bank for International Settlements. Participants also backed innovative approaches to extend usage of financial services amongst individuals and small businesses, building on the presidency's moving from access to usage paper. Members agreed to continue engaging constructively to address concerns regarding Pillar 2, global minimum taxes, with the shared goal of finding a balance and a practical solution that is acceptable to all. The meeting also affirmed a commitment to facilitate further progress to stabilize the international tax system, including a constructive dialogue on the tax challenges arising from digitalization of the economy. These efforts will be advanced in close cooperation across members of the OECD and G20 inclusive framework, preserving the tax sovereignty of all countries. Members noted the ongoing negotiations to establish a United Nations Framework Convention on International Tax Cooperation, received a report on tax transparency, and looked forward to forthcoming reports on tax transparency, progress in addressing base erosion and profit shifting, simplifying international tax rules, while improving certainty, voluntary exchange of real estate information, and strengthening revenue administrations and capacity building frameworks to support domestic revenue mobilizations. Members underscored the importance of aligning finance and health priorities to improve pandemic prevention, preparedness, and response, and bolster efficient and effective health spending. They welcomed updated guidance on health security financing and stimulation exercises, and committed to continued collaboration with the Pandemic Fund and other global health mechanisms. Finally, ministers and governors again turned their attention to key impediments to growth and development in Africa. Participants welcomed analytical work conducted by international organizations and the South African presidency's proposed next steps, which will include exploring a medium-term framework for how the G20 can best support growth in Africa. The South African presidency also hosted a number of side events, including a key forum on further strengthening the compact with Africa, a seminar discussing how artificial intelligence may affect productivity and labor markets, discussions on mobilizing private investment for sustainable growth in Africa, enhancing growth, cross-border payments in sub-Saharan Africa, and addressing natural catastrophe insurance protection gaps. The finance ministers and central governors meeting will convene in Washington, D.C. on the sideline of the annual meetings of the World Bank Group and the International Monetary Fund in October. South Africa will then host the G20 Leaders Summit in November this year during our summer. And as the statement will be released, if you have any inquiries, the email is also laid out there. I thank you.
Thank you, Deputy Minister. Indeed, the statement has been released and is sitting on our website and also the communique. May I now invite questions and ask colleagues, as you are taking on questions, if you can stand up, identify yourself, and then pose your question. Thanks. I see Reuters.
Good. Good afternoon, Deputy Minister, Minister and Governor. Kopano Gumbi from Reuters. Just two questions. Firstly, can you detail the key compromises that were made to achieve consensus on this communique and how you managed to successfully convince the United States to sign off on this communique? And then secondly, to the Governor, the communique emphasizes central bank independence quite prominently. Could you elaborate on why this was a priority for the G20 this time around? Did US President Donald Trump's latest comments to the Fed chair have any bearing on your decision to emphasize this? Thank you.
Thank you, Kopano. Number two. I have number two here, then you'll be number three. Thanks.
Thank you. Good afternoon. Enoch Godongwana from EWN. Can we, just jumping on to Kopano's question on the communique, get a sense of the issue on sustainable financing and the issue on defining that specifically. What was the issue there, and what was the agreement finally in terms of defining or how to define sustainable financing? And then can we also just get an update on where we are with the Cost of Capital Commission that was established earlier this week? Can we get a sense of where the work is at the moment? And then just the issue of cross-border payments, please, in terms of the discussions about how to get around the regulatory frameworks. What were the discussions about that, and where do we stand there? Thank you.
Thank you. Number 3.
Hi, I'm Kanika Seigel from the Africa Report. Just one question. You talked about the debt vulnerabilities and the debt situation that we're seeing across Africa. I'm just wondering, when it comes to plans for restructuring, how are you hoping that the discussions that you've had during these meetings will help reduce the time it's been taking to have restructuring done for some of these sovereigns?
Thank you. Now handing over to the panel. Minister, I don't know whether you want to answer with your strained voice or you are going to deploy the answers. Governor. All right. Over to you, Governor.
I will only answer central bank questions. Central bank independence. Why this time? Well, it did feature in Brazil last year too. And so central banks had embarked on a process when faced with the zero lower bound to do quantitative easing. When you are no longer at the zero lower bound and inflation is rising, you're going to have to almost call it quantitative tightening, but you are having to unwind the quantitative easing. There had been contestations about central banks around the globe. Pronouncements were also made in Europe and all of that. And at the meeting of the IMF in Washington in April, the issue of central bank independence came very strongly there. Unfortunately, there was no communique at that time. And this time round, because a communique could be issued, then you are seeing it. The last time we had a communique was in Brazil last year in the G20, and the IMFC, which is another forum where these things are discussed, have not had a communique for a long time now. So, came out strongly in the conversations about the importance of central bank independence. These things, most of the time, they feature when people get concerned about inflation. They say, oh, we need somebody to deal with, or some institution to deal with inflation, and we happen to be that. Cross-border payments. And how do we get around the regulations? No, we are the regulators. We set the regulations. So, we are making regulations to work to deliver the regulatory objectives. And the regulatory objective here was to have fast and efficient and cost-effective cross-border payment systems. And in that journey, we had to find out what was the problem, and we call them frictions. And so what we found was that there wasn't regulatory and supervisory certainty from people. So as regulators, we had to give and state what our regulatory and supervisory expectations are. What do I mean? When you ask the financial sector, private sector, and say that these are the regulations. Their interpretations is to take it to the maximum possible because there is too much cost in non-compliance. And so the key standard that had to be dealt with was recommendation 16 of the Financial Action Task Force. Recommendation 16 is sometimes called the travel rule. And so over the years, this standard had been in place. It had not been reviewed for 20 years. And yet the financial system had evolved so much. So it's been reviewed, and on the 18th of June, FATF released that standard together with the guidelines so that they provide their regulatory and supervisory expectations. That's the one friction. The other friction had to do with capital controls and compliance with capital controls that raises the cost and the speed and reduces the speed of cross-border payments because everyone waits and wants to tick every box before the money could actually be released. And so the committee that I chair with Governor Fabio Panetta of Italy, it's called the Cross-Border Payments Committee, that had to look at this, and a number of regulators had to be coming together to find those frictions so that you can actually bring down the costs. So it was not going around the regulations, but making sure that the regulations do not hinder cross-border payments. That's about the central banks.
Thank you, Governor.
Just before DG and DM answer, you can see why I've outsourced. Let me answer, just correct one issue. Related from EWN.
Nokukanya.
There's nothing called a cost of capital commission. Does not exist. What exists is a panel of experts set up by National Treasury, whose terms of reference include cost of capital. Just want to correct that.
Thank you, Minister. Deputy DG.
Thank you, Minister. I hope you can hear me. I'm not sure if this is... Oh, it is on. Okay. Just to come in on those other questions, you've covered cost of capital, Minister. So cost of capital is being considered in two parts of the G20's work. The one is what the Ministers just mentioned, which is the Africa panel chaired by former Finance Minister Trevor Manuel. And then what we've also done is to request 4 notes by international organizations on 4 areas that matter from an Africa growth perspective. And one of those areas is cost of capital. And the note in that case, which is a note that was done as part of our G20 presidency, was done by the African Development Bank. That was part of a broader suite of notes that also looked at other impediments to growth and development in Africa, which included macroeconomic vulnerabilities, infrastructure, and the quality of institutions. So what was very important for us is to locate the cost of capital work in the right context, along with the other challenges faced by the continent. There was a question on debt restructuring as well. I think and it was specifically around the implementation of the common framework. I'm not sure who asked that question. Yeah, it was specifically around the common framework, and there are a couple of very practical areas where under our presidency we've managed to make some good progress. The one has been that we were able to publish a G20 note, so endorsed by the G20, on the different lessons learned from the Common Framework implementation process, as well as a note that outlined the debt treatment steps. And those were specifically designed to help us improve the way in which situations of debt distress is dealt with. In addition to that, there was also a note on lessons learned and case studies of the previous Common Framework cases. And in fact, if you look at it, you can see that it has improved. The Ethiopian Common Framework negotiations took 12 months and were finalized last week, which is much shorter than some of the other countries that have gone through a similar process over the last few years, like Zambia. So clearly there's tangible progress on how quickly countries are moving through the debt treatment or restructuring process. And in our G20 presidency, we've been able to make a very practical contribution to that work through the notes that we've published. Thank you.
Thank you, DG. DM, you want to add on input?
Well, Kopano asked what key compromises and how the US got brought in. The process of a communique is a very long one. And I commend the two gentlemen who led that process, Rashad Kassim and DG Petersen. The conversations just keep going, and the initial stuff gets drafted, and then there would be virtual meetings and eventually the physical meetings. So every country has a position, and every country puts its own position, and we have got to find each other. Sometimes you would find why sometimes we don't have a communique is that we might have disagreed on a whole paragraph. And the easiest thing would be, if we disagree on one paragraph, why don't you just remove the paragraph because you agree on the rest? Says, no. It's give and take. I am not going to agree to the other stuff unless you also agree on this paragraph. And you have got to find language that accommodates each other. And it takes the poor gentlemen hardly slept because they had to deal with that. So that is the nature of communique drafting.
Thank you so much, Governor. Can I now take another round of questions? In that order, you stand up, identify yourself. Number 1, number 2, number 3.
Hilary Jaffe from Business Day. On the subject of the WTO and trade, what compromises had to be made there, and can you just spell out for us what the crunch of the decisions that are reflected in the communique actually are? You talk about strengthening the WTO, but also making it, if you like, more suited to current global conditions. So I wonder if you could spell that out and whether that took a lot of arguing. And if I could just also ask you to detail what's new in this communique. What are some of the key decisions that were made that take the G20's work forward? Not every single one of them, but certainly some of the top ones. Thanks.
Thanks. Number 2, Fifi.
Fifi from CNBC Africa. Governor, I think just building on Kopano's question, if you can perhaps just give us a little bit more meat on the bone in terms of the response around compromises, and perhaps maybe phrased differently. What changed since February's meetings when the US was perceived to not be in alignment with South Africa's theme of solidarity, equality, and sustainability in terms of the give and takes that you mentioned in finding each other with this agreed communique, sir? Also building a little bit on Hillary's question, but speaking specifically about the statement on building fiscal buffers. If you can just elaborate on what was meant there and whether this does make reference potentially to a tariff relief fund akin to a COVID relief fund that was established in a different kind of economic environment. Just thirdly, we heard from the EU Commission of Economy and Planning a little earlier that US Treasury Secretary Scott Bessent was in on the conversations virtually. Anyone care to elaborate on some of the things that he said, just given the fact that we can't ask him as he wasn't here physically? Thank you.
Thank you. Number 3.
Hi, Julie Bourdin for AFP News Agency. You've managed to reach a communique that does contain a bit of strong wording, especially on central banks' independence. In this context of global uncertainty, what is a signal for the larger G20 summit, the Leaders Summit in November? And did the US delegation make say anything about the attendance of President Donald Trump?
Thank you. Over to the panel.
Thank you very much. If you want to know the views of the US, you should speak to the US. We are the presidency of the G20, and we are here to tell you what the G20 has agreed on. And you want to know what were the specific compromises that were made? Whatever has been compromised is captured in the communique. The communique reflects the trade-offs that were made by different countries. Every country got in there with its own expectations and what it wants to achieve, and in the process, you give and take, and that is what you would face. I don't know which deputy minister, which one you want to take, but let me just this thing about. You said that Scott Bessent participated virtually. That must be some other meeting. The US was represented physically in the meeting by an official of the Treasury and by the Vice Chairman of the Federal Reserve. I don't know, maybe the EEC Commissioner was talking about another meeting where Scott Bessent was in virtually. But here we had physical presence of the US in the meeting.
The fiscal buffer. So, look, it's in the context of this shock-prone environment. We're expressing huge shocks. It was COVID, as you recall, and other shocks as a consequence of wars, and not just physical wars, but also trade wars. And those have huge impact on the growth of the economies all over the world. So fiscal buffers are important so that when you experience those shocks, at least you have some money, either in the contingency reserve or you've got budget surpluses, which helps you to deal with those shocks. I mean, COVID, we've seen what has actually happened. A number of countries that were successful in responding to those shocks, they had very good fiscal buffer. So if you're vulnerable, your debt levels are high, and as we've seen on the continent, debt levels increased after COVID and when we saw the war in Ukraine. So it's important for us, that's basically the call, that is important that in this shock-prone environment to make sure that we do have fiscal buffers. It's an important thing that we've got to do as fiscal authorities. The second issue around the trade, I think the key issue for the meeting, free trade is important. We're living in a globalized economy. Multinational companies are producing in different sovereigns in geographic spaces. And as they produce these things, you don't want them to find it difficult to get access to the market. Because if it's difficult for them to get access to the market, they are not going to realize profits and they won't reinvest into the growth of the economy. So this meeting again emphasized that it's important for us to be a rules-based world. The multilateral institutions that have been set from after the Second World War and the First World War, it's important for us to run our global economy through multilateral platforms.
Thank you, Deputy Minister.
I think, it was very important, just about to say that there was a very strong expression of a commitment to multilateralism. So when you think about that WTO, that commitment to multilateralism, it also applied with the IMF, and we mentioned multilateral development banks. So it was in the context of all of that. Larry, you asked what movement, what progress had been made. And again, you said February. There was no G20 communique in February. There was the chair's statement. The last G20 communique was in July last year in Rio de Janeiro. So let's get the things. And so you want to see the progress. And some of the progress actually almost like gets lost, but you must go through this. The Financial Stability Board presented to us recommendations with respect to dealing with leverage within the non-bank financial institutions. It also gave us recommendations on the compilation of data to track what is actually happening in non-bank financial institutions. Now, the stuff about non-bank financial institutions had evolved over such a long time in the G20. And given how long you have been covering this, maybe I might help to jog your memory. It used to be called shadow banking. Then it was called bank-like financial institutions. Then it was called market-based finance, and it is now called non-bank financial institutions. And what basically this thing reflects is institutions like asset managers and that are not falling within the clear definition of banks, but are playing a very important role in financing. And they tend to be very big players in the bond markets. And most of the time when you talk about capital flows, it is the non-bank financial institutions that are involved in those things. And we said leverage, dealing with leverage in the non-bank financial institutions. You might remember other institutions that used to be called highly leveraged institutions, colloquially known as hedge funds. They are part of that grouping. So I just thought that so that you would understand that. There had been a big thing. We had said that special drawing rights are allocated, and they get allocated according to your share in the global economy. What that means is that the countries that have big economies get allocated these special drawing rights, but they actually do not need them. And so what was then decided some time ago was that we must find a mechanism to channel those special drawing rights to the countries that need them, and to the extent possible to multilateral development banks. And what this communique is reflecting is that now just around $100 billion in special drawing rights has been rechanneled to the countries that need them, and there are further pledges, and we would like to see that get forth. I've told you about the cross-border payments, and I've said that the big change that had to be noted is what we have done with giving regulatory and supervisory expectations. So, and again, you would realize I've stuck in my lane. That's the stuff that has to do with central banks.
Thank you. DJ, do you want to add on?
Thank you, Cleo. Just maybe a...
DG, can you move closer and come to the light, please?
They want me to step into the light.
Yes.
Is this okay? Okay. Thank you. So, just maybe one or two additions. The DM, I think, answered the trade issue quite well. I think it's worth adding that in addition to the points about the nature of the openness of our trading system, I think the communique also talks very clearly about the centrality of the WTO and its role in that. And I think that's an important point to make, in the same way that the communique reaffirms the IMF's role as being at the center of the global financial safety net. So I think that's worth adding. In terms of what has changed since February, there's obviously what you will notice in the communique is that at this point in our presidency, there's quite a lot of work that's been completed. So as you go through the communique, you will see references to specific items of work that is done. I referenced the G20 work on debt treatment, the notes that was published there, but in each of the sections, you can see that there are various other references to work that has been concluded. And that's a key part for anyone's G20 presidency, is to be able to highlight some of the work that has come through. You can see that in the infrastructure section. You can see it in the health section as well, and a few other sections. And of course, the easiest way is to read, as the governor said, the chair's statement from February side by side with the communique to get a very good sense of what has changed. And then just one more point. The governor is correct. There was a communique, the last communique, there was one in June, July in Brazil, and then there was also an October communique during the Brazilian presidency, and that would have been the last one before today. Thank you.
Thank you, DG. Colleagues, I'm now going to take a last round of questions.
I thought, DG, you would have emphasized progress of the infrastructure and also say, by the way, both of us and the Americans liked that section.
Thank you. May I take the last round of question, colleagues, noting number one. Number two, is it only two hands? Number three, only three? Happy? Is it four? I thought it's three. Okay, no problem. Number one.
Hi, Kosuke from Kyodo News, Japan. I have a question for the minister. I know you're losing your voice, but I would like to deliver the voice of the voiceless. So I'd like to give you a probably very easy and simple question. So how do you oversee or evaluate the discussions that led to the communique?
Number two? Where did you say number two?
Okay.
This?
Doesn't look like it. Okay. Just two follow-ups. So as DG Peters just mentioned, looking at the chair's statement and looking at this communique now, there is a very clear drop of climate finance and climate financing. And I just wonder was that part of the compromises that had to be made in order to get WTO and other issues into the communique? You dropped the explicit mention of climate and climate financing, or was there another reason that could be explained? And then secondly, as South Africa reaches the midpoint of its G20 presidency now, what concrete deliverables are you hoping to achieve before you hand over to the United States? Thanks.
Number three, Fifi.
Apologies in advance if this is a dumb question, and the apology goes specifically to the governor. But just procedurally, if you can just guide us as to what next from here, procedurally.
Thank you. Over to the panel. There's never a dumb question. You always learn from a question, right? Over to the panel. No, sorted. Okay, Hillary.
just one last question. What indications have you had from the US of the kind of G20 that they plan to host next year? Because there certainly have been some media reports in the international press suggesting that they may downscale it quite considerably. Have you had an indication that that is the case? And if so, is it a concern for the future of the forum itself?
Thank you very much. Before I take over to the panel, is there any other question that is coming through? Everybody is happy? All right.
We had heard that it was the view of the US that we've got too many, or this G20 structure, there's just too many different task forces and streams, as it were. And I'm just wondering, to her point, whether there is going to be a change in the structure of the G20, and whether that was an area of compromise this time around.
Thank you so much. I'm not saying...
Once you have the microphone, can you clarify this thing? I do not understand your question. The question about procedurally, what procedurally was?
What next? So in terms of, after this, you better adieu, but this communique now has been released, and just what happens next in terms of your tasks, the tasks of the finance minister in his capacity as well, in the lead up to November, sir.
Okay, now I understand.
Thank you, Governor.
Okay, now I understand. DM, are you going first? Can you go?
Just on the climate finance, there is a reference to that in the context of vertical funds and environment, and issues around adaptation, sustainable finance. The language is there. But you know, one I learned when I was also a student negotiating with management for something, access to education, I learned that you don't let language to be a barrier for discussing substantive issues. So, and I take it that even in the spirit of these negotiations with DG and the team from the central bank, I don't think that the issue was about the language. Because language, as I said, it can serve as a communication barrier. You disagree, you have split and all that. But to answer your question in a short way, I think the language is there if you read the statement again.
Thank you, DM. Governor?
There is a whole section, on sustainable finance. And it deals with these things. So there's a difference between the chair statement and the communique, which has been toned down. The chair statement reflected the views of the chair. It reflected the views of the chair. This is what the chair was taking from that meeting, and there might be lots of other people in the meeting that agree with the views of the chair. And the reason why there wasn't a communique was also that you couldn't agree on the framing, and the Deputy Minister refers to this. Do not allow the language to be the enemy of what is meaningfully being discussed. The meaningful discussions that are taking place. Just thought that we would deal with that. The USA is streamlining the thing. It would be very useful to hear it from them, because we do not know. But streamlining the work of the G20 is nothing untoward. We did it. We streamlined the work of the G20. We even decided we are not going to add new things. We will rather lift things up. So the point here is that we are the last one to chair. What has been happening is that every chair added new items on the G20 agenda, and nothing fell off. And so you can then imagine, having gone full circle, how the agenda is actually looking like. So it's a genuine question to say that we must streamline the agenda. The agenda also gets complicated. Remember that when the G20 started, it was just finance ministers and governors. Now there is one for health ministers, for labor ministers, for think tanks,
women,
for youth.
Small and medium.
So you get. They said we must have one for media, the fourth estate. Okay, so that is the thing. How do we evaluate the discussions leading to the communique? I'd say to you, very collegial, very positive. We wouldn't be having a communique if the conversations were not collegial. And again, the credit goes to the two gentlemen who are standing there, who are not on the podium. It is the work they did in that respect.
Let me just add.
DG, may I invite you to the podium?
Let me just, before DG, let me just give you an indication. If we set up a trade division of G20 in an environment when the Americans are taking WTO, invariably we are assisting, in my view, we are assisting in destroying the WTO. We've got to be careful about that. The same applies with having separate meetings for labor when we have in ILO. You see what I mean? So if you ask me, kind of teaching normally don't want me to talk a lot because I normally off-ramp. So I normally off-ramp.
No off-ramping.
Because if you ask me, you'll find that the Americans will find support among some of us. It's too convoluted, this thing, as it stands.
Thank you, Minister.
I'm pleased because it sounds like the voice is coming back. Fifi, your question is not dumb. Let's get the thing clear. You said now procedurally where to from here. We set the agenda last year as we assumed the presidency. There's a series of working group meetings that fed into the deputies' meetings, and the deputies fed into the ministerial meetings. It's a process. And in a way, it answers Kopano's question, because Kopano says that what are the concrete deliverables? The point here is that this is a process that is running, that will culminate with things. The last finance ministers and central bank governors meeting will be in Washington in October. That will be the last meeting before the summit that in Johannesburg in November. So it's building into that. Some of the things might be things that are being recommended to the heads to the leaders, and the leaders must make a decision. From where I am with the central banks, we are in the Financial Stability Board. We've been tasked with achieving the targets for by 2027 of the cross-border payments. Procedurally, we have got to table a report annually for the heads of state, which we will do in November. And that report will spell out exactly what progress had been made, what frictions did we encounter, and how we intend to deal with that to make sure that we deliver by 2027. I don't even remember, I think it might be the UK which will be chairing in 2027, and that report comes in 2027 and says that we have achieved this. It's G20 achievements. You can't say that, oh no, South Africans, you worked on this thing in 2025 and you didn't, and look, the UK come in 2027 and look at the results. It's because this thing had been running, and again, we decided we are elevating it. The work on the cross-border payments started under the Saudi presidency, and the Indians and the Brazilians just kept on lifting, and that is also what we did, lift it further. Yes.
Thank you, Governor. DG?
Thanks, Cleo. Just two quick points from my side. The DM was correct on and the Governor on the climate language. I think if you go throughout the document, you'll find it in various sections. And importantly, right at the end of the document, there's a very important reference to the upcoming COP30 in Belém. which is quite a strong reference at the end of the document, and I think that's quite important. In terms of the deliverables, we, of course, publish the deliverables as they go on the G20 presidency website, but one of the things we could do is to make available a document containing a list of the deliverables that we've achieved thus far, plus the ones that we are planning to do. And this will be in terms of specific documents that have been finalized, side events that have been hosted, dialogues, and so on and so forth. So if that's helpful, that's something, Minister, Governor, and DM, that we can make available to the media. Thank you.
Thank you. Before the panel, we have Bloomberg. I call it a Mandela Day question.
Thanks. We share a birthday anyway.
Happy birthday.
Thank you. Matt Hill and I write for Bloomberg. I was hoping you could talk a bit more to give us a sense of how difficult and how significant it has been for South Africa to be able to deliver this communique today, especially looking at the current context of the world's geopolitics with all these tariff wars and a lot of friction going on. And perhaps if you could say whether that is reflected in the state of your voice, Minister.
Thank you so much. As we respond to that question, I would like also the panel to make closing remarks. Thanks. Over to the panel. Matthew's question. Matthew's question. How significant is this moment for South Africa?
Look, I said to somebody since Indonesia, which was tough. Mind you, Indonesia, we had to Indonesia immediately after Russia attacked Ukraine. It was a very, very, very tough presidency. When I compare ours to 2022 in Indonesia, because it happens in this environment when there's a changing geopolitical situation which confronts us, and we're hosting it, being a small player, by the way. So it has been difficult. What they did not show, there's also some minor things behind the scenes which were playing that way. Even in the formulations you are talking about, Copan. So it has been a difficult one in this environment. I compare ourselves to the 2022 Indonesian scenario when everything was up. So to achieve what we've done in that environment, I think, in my view, it's a huge success. It's a huge success in that environment. You must understand, it's even in the Shepherd track, it's even difficult to move. At least in our track, we can get the Americans to participate. In the Shepherd track, they're not. So in that sense, I think, to me, is a major success. But the environment has been difficult. I compare it to the 2022 Indonesian situation.
Thank you, Minister. Deputy Minister, Sampai.
Look, my last words, we're facing all the problems humanity has. No nation states can solve them alone. These are global problems. The pandemic doesn't know borders. COVID did not ask whether this is South Africa, America, Japan. It hit the entire world. Similarly, the climate change, it doesn't care about borders. If it hits the entire world. Companies now, they are globalized. Ford is operating in Silverton in Pretoria. It exports to the US. And therefore, it's also in the interest of the US to allow, or any country to allow the global economy to be run on the basis of multilateralism. Because otherwise, if we keep fragmenting and not solve problems collectively beyond nation states, through nation states, of course, humanity will be in crisis. And I think for me, this G20 moment, which also produced a communique, is an important indication that the world requires all of us to come together and solve the problems.
Thank you, DM. Governor, your parting shots, your closing remarks.
I agree with the Deputy Minister.
Thank you so much. Thank you, everyone, for participating. We've come to the end of the media briefing. The panel may leave the room. I'd like to thank each and every media person that is here. You've been it was great hosting all of you. We've worked well together. I hope we continue to work in this manner. Thank you. Meeting is adjourned. Thanks. You want to clap? Clap.